If you're running a cash-based business, whether it's hair, barbering, landscaping, you sell plates, food plates on the side, or maybe you're a car wash, laundromat, whatever, then this episode of Real Talk with the Gen Z Accountant is just for you. Welcome back to another episode of Real Talk with the Gen Z Accountant. I'm the Gen Z Accountant. In today's episode, I will be discussing how to properly run your business when you are a cash-based business, meaning you primarily accept cash in your business. I want to just help you to make sure you are operating to your peak so that you can have a long-lasting, thriving business. Why do people or business owners decide to be a cash-based business? Not outside of the illegal reasons on why people want to be a cash-based business. A lot of the times people are cash-based businesses because they feel like it's easier to just have people just hand you the cash because they know like I'm getting the same amount that they're giving to me, so people can't dispute it. It's less hassle having to transfer money from bank account to bank account, or from your POS system, your point of sale system, to your bank account. It's easier to just have the cash right then and there. Some people in today's age, they don't trust the bank and they're scared that if they put their cash in the bank, then it is a possibility that it could be gone one day. They feel safer if the money is in their house. And honestly, sometimes business owners, especially in the beginning, you may think that you don't make enough to really be putting money in the bank account. The money you may make a couple $100s here and there. You don't really feel like it's a need to put it in a bank account and really track it. But I'm here to tell you today, as a real Gen Z accountant, being real with y'all, being a cash-based business, it holds you back a whole lot in life, especially if you're having a business that you actually want to grow. If your business is something you do here and now on the side, then what I'm about to tell you may not be as significant to you. But if you're a business owner who really wants to take their business to the next level in life, wants to make their business their primary source of living, and be able to experience great things and really grow something big, then holding your cash, having a cash-based business is going to be a detriment. So listen to this scenario I paint to y'all, and it's going to show you why it is so important to, yes, you can accept cash, but you need to be making deposits into the bank. So let's say, for example, you have a plate business. So you sell plates. So you sell a meat and two sides. That meat and two sides was like the banger of the city. Everybody wants the plate, right? Because it's so good. So you're making a lot of money, the money coming in. Now you decide, okay, I want to take this to the next step. I'm tired of, making plates in my house. I want to go to the next level and open up a storefront. So you go to the bank to get a loan and you ask the bank, you're like, hey bank, I need $50,000 to start to renovate my business. You're telling the bank, like, my business is so good. Everybody love my food in the city. You can see I'm viral on social media. I need you to give me $50,000. But let's keep in mind, you are a cash-based business. So you don't have any type of paper trail showing the amount of money you're making. So you go to the bank, you're like, give me $50,000. The bank is going to ask you, can you prove to me that if I give you this $50,000, you're going to be able to give it back to me? You're going to say, yeah, I make money. Like, I make like $500 a week. I'm making a lot of money. I'm making money. You can trust me. But if you don't have documentation showing how much you're making and proof that you're making a certain amount of money, it's going to be extremely hard for traditional banks to trust you with their money. Now, there are loopholes out here. Of course, there's always a loophole to something. But if you don't want to have to go through all these loops and holes to get funding for your business, then it's going to be super important for you to take accounting serious in your business, especially cash-based businesses. So, outside of that example that I just gave y'all, another reason why it is a struggle in your business when you are a cash-based business is because it's hard to really track your cash flow. It's hard to really know what's coming in and out of your business because you're going to have to manually, every single time you make a sale or every single time you make a purchase, you're going to have to manually write this down. And of course, we're human. We get mixed up and caught up in things. You may forget 1 or 2 or 3 or 50 times to write down how much you made in a day or how much you spent in a day. So you're not going to have accurate documentation about the health and the progression or degression of your business. And that is so important. You're not going to know if you're thriving in business or if you're not, not thriving. You're just going to think, oh, I'm making cash. I made cash this day or this week, then I'm good. But in reality, your business could be on a slow spiral of failing. So this is why I stress to y'all, track your cash flow. Now that we understand why some people use cash-based businesses and some of the struggles that come with being a cash-based business, let's talk about how to properly run your business as a cash-based business. Now, of course, I am an accountant, but I'm not your accountant. So make sure you consult with your accountant to make sure that what I'm telling you is actually going to help you and be beneficial for your business. But speaking from experience and speaking from, having my own business in life, I feel like my voice holds a little bit of weight, Okay, so first thing you need to do is make sure you are tracking the cash that comes in and goes out. You can use something as simple as Google Sheets. This is something that's free. All you need is a Gmail account to list out these 4 specific categories. You're going to have the date. You're going to have the type of product or service that's being sold. You're going to have the amount. And lastly, you're going to have the payment method. Cash, debit card, whatever. Okay, so let's say that I went to a pop-up shop to sell my book at a festival. Every time I sell one of my books, I'm going to write in my Google Sheet the date that it was sold on, the product, my book, the amount, $20, and the payment method, cash. So that way, at the end of the day, I know exactly how much I made from my books. Cash, Cash App, Zelle, Venmo, whatever ways you accept, you're going to make sure you're listing that out, okay? Outside of using Google Sheets or something, something that's free, you can get a point of sale system, a POS system. One of them, I haven't used any specifically, so I don't know which are the best, but there's tons of videos out here explaining to you the pros and cons of different point of sale systems. But you can use the point of sale system and, still say that you're using cash to sell your product, because there's businesses out here, that use, what's it called? Square, because I be seeing them. They use Square to still accept cash. They just tell the point of sale system that cash was accepted. Now it's just up to you to count that money, make sure you're actually getting what you say you're putting in the point of sale system, which moves us to step 2, which is utilize bank accounts to hold your money, especially ones that you trust. Like, go to banks that are reputable, that's been around for years, that are FDIC insured, meaning that the government will back up the amount of money that you put in there if something was to happen with the bank. Use banks to your advantage. I understand some stigmas that could come along with banks because, yes, they could fail at any moment, any point in time. But at least your money, for the most part, is at a safe location. Because if something was to happen, I hope it doesn't happen. But something can happen to someone's house. It could burn down. Now all your money is burnt and gone. You have to start from ground zero. Or a bank can burn down too, but it's a little different with them. When they burn down, it's a little different versus when your home burned down. So I say all that to say, utilize banks to your advantage, if you trust them, if you feel like it's a good place for your money to be, to house your money and help you to keep track of your money. And to show a paper trail that you're actually making money. Because, like I said, in one of the hardships, it's going to be hard for you to get loans and get car payments and, be able to scale if you don't have no proof that you're actually making money. No one's, if I went to you and you never seen me work a day in my life, and I'm like, let me borrow $1,000. Not even nothing crazy. Let me borrow $1,000. I'm going to give it back to you next week. If you've never seen me work, if you know I'm known for never working, because to the bank, that's what you look like. They don't know you, so they're going to assume you don't make money that you're saying that you're making unless you can prove that you're making it. So if I went to you saying I want $1,000, I have no proof of saying that I can make $1,000 or more to pay you back. Would you trust to give me $1,000 and expect to give it back? I highly doubt it. And I hope you wouldn't. Really think about it. That's how the bank is thinking. The bank is thinking the same as a regular person would. Am I going to get my money back if I let them borrow this? And if you don't have any paper trail showing that you can make money to give it back, or any projection that you're going to be able to make it back, then the bank's not going to trust you. Now, of course, there are loopholes out here. There's always a loophole to something. But if you don't want to have to go through a whole bunch of loops and holes to get money and funding for your business to scale it, take accounting serious, okay? That's all I'm asking for you. It's for your better being of your business and yourself. Like, not for me, for you. So yes, back to my point of saying that just use banks to your advantage, okay? To help you to store and track and prove that your business is actually thriving. And lastly, if you make purchases in your business using cash, you want to make sure you're keeping your receipts. You should keep your receipts regardless on if it's cash or if it's digital. You can maybe email it to yourself, but by having these receipts, you're going to know exactly what you use your cash for. Because if you use cash let's say you're buying this book for your business, you use cash to buy it. you could forget why you spent that $20, but you see your log is $20 less of what you should have. But if you have your receipt and you keep it and you log it, then you'll know that you spent that $20 on this book. Okay, so you can then use this book. You can write off this book, tax write off, because it's helping your business. You can, use this book to, help your business thrive, lower your tax bill, and just be a great business in general. So the biggest thing when it comes to being a cash-based business and how to operate properly is to just make sure you're tracking it. Track it and, log it as soon as the action happens, because you're going to find yourself, if you keep on putting it off, at the end of the year, when you're trying to figure out how much did your business make for tax reasons, or if you're trying to figure out if your business made more than it did last year, it's going to be extremely hard for you to track that or to know what that number is or that answer is if you was not tracking it throughout the year. The last part I want to discuss in this video is cash-based businesses when it comes to the IRS. Some businesses will accept cash only because it's hard for the IRS to track it and know how much you really made, because it's cash. It's no tracking device on cash, so the IRS don't really know how much you made. So that's the reason why people do that, to evade taxes. But whether it's cash, if it's Apple Pay, if it's Zelle, Venmo, through your website, no matter what payment was used to buy your products or services, you are supposed to tell the IRS how much you made. Okay? So don't just think or let people tell you that just because you made cash, you don't gotta report it or whatever. Because if for some reason somehow you end up getting caught up on the amount of money that you made, putting an amount that's not accurate, then you could get in a lot of trouble, and I don't want that for you. Okay, I want you to be a successful business owner who is making money, who is thriving. Report to the IRS the amount of money you made, and also reporting your expenses and deductions so you can lower your tax bill. Just do everything to your knowledge and your capabilities to do it right, so that way you don't have to go back and redo things. Okay, redo stuff or try to get out of situations that you don't want to be in. So just make sure you are telling your person who prepare your taxes, your CPA, your accountant, your tax preparer, just make sure you're also telling them the amount of cash and everything that you're making in your business, so that you could just have your IRS report, your tax report to be accurate and correct. And keep in mind too that sometimes mortgages, people, mortgage for a home or certain things in life, they ask for your tax return. They want to see how much you're making to see if you'll be able to pay whatever it is you're trying to get. So you don't want to put yourself in a situation where you're holding yourself back just because you want some current relief from having to pay taxes. So just, begin to put money aside throughout the year, out of the cash you make, out of the money you make. So that way when it's time to pay taxes, you have the money ready to be sent to the IRS and you don't have to worry about it or stress. Okay, so that's a great tip I have for you to avoid all these issues, all these issues with the IRS, is to just start putting money aside into maybe a high yield savings account and just let it sit for the year. It's recommended to take out 20 to 30% of how much of your profits and put it over into your a separate account for taxes. But take out how much you feel is necessary and avoid those issues. That's all I have for y'all in this video. I hope you now understand and really see why it is important to still track your income and still run your business properly, even being a cash-based business. Okay, so if you learned something new, let me know down below in the comments. If you need more help with your business, don't forget to check out my book, Loose Money Gets Lost, The Ultimate Guide to Financial Stability and Lasting Business Growth. I go through what I went through today, plus a lot more, such as the most common irresponsible habits business owners have that is setting you back possibly. I also go through tasks that you should be doing every day, every week, every month to have a healthy and thriving business, and a lot more. Okay, so go ahead and check it out. I have the ebook in the description, and I have the physical copy on Amazon linked in the description. Just click the link and you'll be right there. So yes, let me know in the comments down below if this video was helpful to you, and I will see you in next week's video. Peace.